the oil market. So I'm showing you WTI. It could actually be Brent, forgive me. $150, that's when they were creaming you in the bull market supreme of all of us making home equity through our ears. That was your slap down, that first red column. You ran a low. We traded that second short at $104. We held it for an extended period, and even still it surpassed our expectations. In other words, we had a pattern structure. This is part of our technical analysis that I do. I'm the chart guy. I love charts. An incredible, that's warned us of overperformance, and we got out too soon. We actually ran what I consider a Great Depression low for economic activity in oil, and I just didn't see that coming. So that's that point over there, roughly tying with the big collapse in China. So these oil collapses also dovetail beautifully with economic activity. One was subprime, the first. The second, many don't realize that 15 to 16 was a pivotal year. Throughout that period, China became the big story. They were creating the heat while the West was absolutely on the bones of its ass. During that period, they loaded up on debt in such a short time frame that they went from under-indebted to the most over-indebted nation of all, creating heat in the world. It's the reason that Australia just bypassed the 2008 property correction, and more on that later when we talk Aussie dollar. And that was the end of that. That was the game coming to end. We had unofficially, as Jim Rycards referred to, the Shanghai Accord at that 2015-16, end of 15, beginning 16 event. Since then, there's been a little bit of a reflation back up. And we get these regular hard stamp downs. So those three yellow areas that I'm highlighting are what I anticipate will happen next for oil, potentially even a new low to the previous low. I've gone so far to say, and this is trying to be controversial maybe, but I'm saying that people are underpricing the possibility. They're underpricing. That doesn't mean it's high probability. Underpricing means you might think it's 0.0001%, and I think it's 5%. That's an underpricing of single-digit oil. That's not a prediction, but I think it's being underpriced. Fracking is getting way more efficient, unfortunately. They're going to continue. They're going. Initially, we understood that there was very short life. They're extending. America is independent. So if we go down, you might notice also that this is all a huge falling wedge. I don't know if any of you are technical, so falling wedge might just be a bit confusing. This is a monthly chart. Eventually, inflation might get us a bump. Oil isn't going to go away. Most of us are still in petrol-driven cars, etc., but it's going to be demonetized, and the new tax is coming, and that's my take. And you can play this trend. So expensive, offshore, exploration companies are ripe for a picking in terms of oil. Gas, people that think it's very low and flat, it's going to stay low and flat by my reckoning. And as I've mentioned, by the time the Saudi Arabian citizens get offered to share in the national wealth, you know it's the sheikhs unloading to the patsies. Unfortunately, that's my take. So what about inflation?